Hey togglers, in this video we're going to explore the toggle leading indicator, aka the TLI. We'll go over what it is, how it works, and when to use it. We will also interpret the charts sent out in every Friday edition of the Toggle Daily Brief. As the Toggle engine generated thousands of insights daily, the Toggle team came up with the idea of aggregating the insights to create the TLI. An aggregate measure of insights across the US market with a very strong track record of gouging market direction with a 12-day forecast. The TLI is simply a normalized ratio of all US bullish insights to bearish insights generated that day, with a range of -1 to +1. We have found that when it crosses the critical thresholds of plus or minus 0.15, the TLI leads the S&P 500's direction by 12 days. Since its launch, the TLI has had a very strong track record with a historical accuracy of 86%. Looking at a 12-day trading day horizon, the indicator had a forward correlation of 62%. You can think of this value as the amount the market moved whenever the TLI's critical thresholds were hit, be it bearish or bullish price action. In mathematical terms, a forward correlation of 62% can be considered strong. Let's take a look at TLI sent out in every Friday edition of the Daily Brief. The first chart is an overlay of the TLI pushed rightwards 12 days, overlaid with the performance of the SPX, showing the frequent correlation. In graph 2, we see a scatter plot showing the TLI value in the x-axis against the difference in price of the SPX extrapolated to show projected prices 12 days later. This is primarily useful for options trading, but is also helpful to visually see the historical performance of the TLI. In chart 3, we have a comparison using the Granger correlation analysis of the TLI to the SPX versus the autocorrelation of the SPX, which is simply how correlated the SPX is to itself X days later. Granger correlation is a statistical test used to measure the extent to which a time series forecasts another time series, assuming both are independent of each other. In our case, whether the TLI forecasts the SPX's direction. As we can see, maximum correlation occurs 12 days after the threshold is crossed. Keep in mind that this chart, along with the other two, show the entire domain of the TLI, including when it is not in critical periods. The correlation test, however, only measures points above and below 0.15 and minus 0.15, respectively, showing significantly stronger correlation. The aim of this chart is to illustrate that the TLI is not simply capturing past market data and inferring from that. Further explanations of these graphs can be found in the TLI article on the Learn Center. The TLI can be found at any time on your Toggle dashboard by going to the My Toggle page. Over here, you will find two graphs. The SPY at the top, which is an ETF tracking the S&P 500, with the only difference being that the price is divided by 10, and the toggle leading indicator on the bottom. The TLI chart is updated daily with the ratio of number of bullish to bearish insights generated for the date. Both graphs work in tandem as a new TLI point is created on the SPY stock chart whenever the TLI crosses the critical bullish or bearish threshold at plus or minus 0.15. This can be seen whenever the bottom graph crosses the green or red dotted line. When the value of the TLI is greater than plus 0.15, the green line here, a bullish TLI, is generated on the top chart. Conversely, whenever the TLI value is less than minus 0.15, a bearish point is generated. When the TLI has a series of bullish days or bearish days, a cluster of dots are generated like this. This signifies a significant probability of seeing the respective price action in the S&P 500 over the next 12 trading days. As higher the TLI, more the potential for upside and vice versa. However, make sure to not confuse this measure for a buy or sell signal. Since the TLI is generated based on insights which are generated based on historical data, it is not a guarantee that history will repeat itself. In times of outliers like a global energy crisis and skyrocketing inflation, expect markets to be volatile and nothing like history. However, with clearer skies, the TLI can benefit your trading and research about the S&P 500 and its related ETFs. Remember, Toggle Insights measure fundamental, macro, and price information, which provides great quantitative metrics on projected asset performance. Nevertheless, you always want to complement that with common sense research and a responsible investing strategy. To dive deeper into the TLI and Toggle, make sure to visit our Learn Center on toggle.ai. Thank you.